Welcome back to News Now. Well, the Indian market is shut on account of the Dussehra holiday, but there are a lot of market cues to track. Asia, for example, this morning is trading weak after a weak handoff from the United States. Nikkei and Hang Seng down almost 200 points. Hang Seng, as we speak, at the low point of the day after it was shut yesterday. Nikkei is under pressure as earlier today data showed that Japan's export fell in September for the first time since 2016 as shipments to the United States as well as China declined. Shanghai too is trading lower with a deep cut of around 2% as yuan continues to weaken. Remember, Shanghai market has been trading at a 4-year low and has been coming under acute pressure of late. And all of this because the US markets actually remained very volatile yesterday. At one point of time, Dow was down over 300 points but ended with a cut of around 90 points. Now, there were divergent hues in the US market. On one hand, we had strong earnings from the like of Bank of America as well as Goldman Sachs, and that really supported the sentiment, while on the flip side, the minutes from Fed fueled the nervousness. Now remember, Fed's September meeting minutes showed that the central bank remains convinced that it needs to tighten the monetary policy to keep the economy steady, hinting at perhaps one more rate hike this year. Now, this actually led to a surge in the US yields, which soared to a level of 3.21%, adding to the risk of sentiment. In fact, let's now go across to my colleague, CNBC's Josh Lipton, to tell us what transpired on the Wall Street yesterday.
U.S. stocks finishing the day lower, the Dow dropping 91 points, the S&P slipping less than 1 point, and the Nasdaq off by 2 points. The Fed is pointing to more rate hikes amid President Donald Trump's continuing criticism. According to minutes released from the central bank's most recent policy meetings in September, Federal Reserve officials still believe that gradual interest rate increases are the best way to keep the economy trucking along. At the meeting, the Fed approved a quarter-point hike and indicated there will be more increases to come. Elon Musk says he's buying $20 million of Tesla stock during the next open trading window, according to an SEC filing. Tesla shares closing nearly 2% lower. Musk is already the company's largest shareholder, owning more than $9 billion worth of stock. Musk bought $24 million worth of stock in June and $9.9 million in May. Tesla shares down 11% on the year. And if you own an Apple product, you can keep tabs on your privacy. Apple launching a portal letting customers search and see what information the company collects from them. In May, Apple tested the portal in the EU. Information collected may include data like users' calendar entries, website bookmarks, and App Store purchases. The new portal becoming available as Apple implements other privacy initiatives. That's the action from the U.S. market. Now back to you in Mumbai.
Thank you, George, for that. But CNBC also spoke to U.S. Commerce Secretary and asked him on the progress made by U.S. President Donald Trump on trade negotiations with China as well as European Union. Take a look.
I don't know that I'd call it a continued impasse. We are where we are, and in any negotiation, there are ups and downs, there are hiatuses, and there are much more active periods. So it appears as though we may be in something of a hiatus now. Well, the president announced earlier on that he would not do any new 232 tariff impositions on the EU as long as talks were going in a reasonably good manner. So that admonition still holds place.
On that note, let's also hear out some of the global opinion on how the global economy is shaping up.
I think the Fed has become too powerful. In some respects, it had no choice because other arms of the government couldn't handle things in an efficient sort of way. But I think, the essential issue of what is full employment? What is your potential growth rate? What is your inflation target? Those are goals. I think that there should be more involvement with Congress and the executive branch in setting those goals. I'm a big believer in Fed independence operationally, day to day, but in goal setting, I think that they should share the responsibility.